Here are 2 reasons why you should absolutely never consider using a financial advisor, and at least 3 reasons why you should. Now, the first thing I want to cover off is the 4 types of advisor that you'll probably come across most often. First up, it's a mortgage advisor, sometimes called a mortgage broker. I don't really like that term because it suggests that all they do is pick the best deal for you, when in fact they do a hell of a lot more. A good mortgage advisor will help explain the process to you if you're brand new to buying a property or if you're a new investor. They'll look at the market and make sure that you get the best deal. That may not be the best interest rate. There's other factors and criteria that come into play. And good mortgage advisors help support you throughout the process. Next up is an IFA, or independent financial advisor. I am an independent financial advisor, and I'd say the best explanation for that is we take a bird's eye view approach. We look at your financials as a whole. We look at your financial planning, that's short term, medium term, and long term, and make sure the strategy you have, the plan you have, and the advice that you're getting is spot on. IFAs also help with cash flow, so it's looking at the really important things in your life, whether it's money coming in or money going out, and they can help really map out a plan for you. Now, there are financial advisors and independent financial advisors. The main difference there is financial advisors are often restricted in what solution they can offer you. Independent financial advisors are also there for the long term. So they are there as a support, as a help. And if you need anything throughout the year, they're there at the end of the phone. Third thing is an accountant. So those of you that are self-employed or have your own companies, you'll be well aware of what an accountant does for you. For those of you that don't, an accountant helps in a number of different ways. First of all, they make sure that all the statutory things are done. So things like tax returns, which are depending on what kind of structure you have, due several times a year. They help with tax and making sure that you're as efficient as possible. So it's not just about looking back at what you did do, it's looking forward and making sure that they have a proactive approach and they help you really develop your business. Last up, it's a solicitor or a legal advisor. Many of you that have bought or sold a home will be very familiar with what a solicitor does on that side of things. They're called conveyancers and they deal with property. But there's also solicitors for every other part of your life. So that's whether it's family planning, if any of you go through a divorce, they can help in business, so they can help protect you there. They can help protect with property matters, employment. Now, throughout this video, I'm going to be referring to these 4 different types of advisors and the reasons why you should or shouldn't consider using them. Now, the first reason why I'd absolutely never consider using an advisor is if you want absolute certainty. Now, it sounds obvious to say, but nothing is certain in life, whatever you're looking to do. And there are people out there that think if they use a financial advisor, that means they're going to have absolute certainty over what's going to happen. In reality, an advisor can guide you. They can give you the best possible chance of succeeding and doing what you need to do. But particularly in the last 2 to 3 years, we've seen there's so much uncertainty, so many things can happen, and there's so many variables that it's absolutely impossible to tell with 100% certainty what you're going to achieve and what's going to happen. And yes, there's no guarantees, but let's say you were 20 or 30% there in terms of your financial plans and knowledge. Surely being 90% there and having 90% certainty is much better than doing it yourself. Reason number 2, and it's mentioned a lot, and this is about cost. I'm going to do a separate video probably on just how much an independent financial advisor earns, because I think it's important to be transparent and dispel the myth that every financial advisor is a millionaire, because they're not. Now, it's totally understandable, especially if you've never had a financial advisor before, that you would question the cost. As famous investor Warren Buffett said, price is what you pay, but value is what you get. Now, it's not just about saying you get what you pay for, because there's a lot of examples where that's just simply not the case. You can pay a lot of money and actually the value that you get isn't great. So if we consider this chart, cost versus value, you'll see that there are some things that have a very high cost, but actually they produce a high amount of value. Contrary to that, there are a lot of low-cost services and items that produce quite a low amount of value. Now, of course, value is subjective depending on what you need at the time and what your own opinions are. So an example of a high-cost, high-value service may be speaking to a legal advisor about something very specific. You're going to be paying upwards of £300, £400, even £500 for that session, but the information you're going to gain from that and what you're going to be able to do with that information is absolutely invaluable. Another example may be a very specialised accountant specialising in certain property matters. Again, that information that you pay quite a lot for is absolutely invaluable. And also there's something that I refer to as the damage cost, which is the cost of you trying to do something by yourself or maybe not getting the right person involved and doing it the wrong way. A really good example of this would be not investing in proper legal advice, which could end up costing you a lot more in the long run. Another reason is you could save money by using an advisor. That's either direct, so for example, a lot of mortgage advisors have exclusive rates. In the IFA world, there's advisor-only funds that can be accessed that could possibly yield a higher return than the standard funds available. The other thing to consider is the cost of opportunity. Now, I'm not talking about an amazing investment opportunity that you're going to miss out on if you don't invest in the next 5 minutes. A good advisor is never going to pressure you. If you consider the longer term cost of not investing, for example, for 5 or 10 years, then that might be a good example of how an opportunity is missed. And now for the positives, here are a couple of reasons why you should consider using a financial advisor. First up is time. Now, time is so important to many people, whether you realize it or not. There's legislation that's come through all of the financial services industry, and that legislation is called Consumer Duty. One part of that is quantifying how long things take. And an average mortgage advisor, for example, has worked out that it takes them around 10 hours to complete a mortgage case. This is a mortgage advisor that has the right systems in place, the right knowledge and expertise, and really does this day in, day out. So if it takes a mortgage advisor 10 hours to do something, it's probably going to take you a lot longer. And assuming you do see some value in what an advisor brings to you, then that value is increased massively by thinking about the amount of time you can save. And the final thing to talk about, which I think is really important, is knowledge. Now, a lot of financial advisors have spent years and years studying, making sure that they really understand what they're doing and becoming a specialist in the field that they're in. Now, going back to the first point about people wishing to have absolute certainty about something, I'd say that the more knowledge that you have, the more likely you are to succeed. Now, an example of this would be in the pension world. A lot of traditional pensions are invested in companies that most people would not agree with if they knew where they were investing the money. So that's companies like fossil fuels, guns, gambling, pornography, and companies that just aren't running very ethically. Now, the good news to this is there's many ethical and sustainable options now. Something I feel very passionate about, and I'm sure I'll be mentioning it a lot more in future videos. Thanks for watching. I've mentioned value a lot in this video, and I hope you found some value by watching this. And I'll be interested to hear your reasons for considering to use or not use a financial advisor. And please let me know other topics you'd like me to discuss, and I'll do my best to cover them off. If you did find this video valuable, I'd appreciate if you give me a like, and don't forget to subscribe and turn the notifications on below to be one of the first people to watch my new videos.